Welcome to Valkyrie Simple Finance. Understanding before investing. If you've ever looked at stock options, you may have seen strange terms like delta, theta, vega, and gamma. For many beginners, the Greeks make options trading seem incredibly complicated. But the truth is, the Greeks are simply tools that help explain why option prices move. The Greeks measure how different factors affect an option's price. Think of them like a dashboard in a car. One gauge measures speed, another measures fuel, another measures engine temperature. The Greeks work the same way. Each Greek measures a different force affecting option prices. Delta measures how much an option price may change when the stock price moves. For example, if a call option has a delta of 0.50, that means the option may rise roughly 50 cents if the stock rises by $1. Delta also helps estimate probability. Options deeper in the money usually have higher delta values. Out-of-the-money options usually have lower delta values. Think of delta like a trailer attached to a truck. The stock price is the truck. The option price follows behind like the trailer. Some trailers respond strongly, others barely move. Theta measures time decay. It estimates how much value an option may lose each day simply because time is passing. Remember, options are wasting assets. As expiry approaches, theta accelerates, and time decay becomes more aggressive. Vega measures how sensitive an option is to changes in implied volatility. If implied volatility rises, options often become more expensive. If implied volatility collapses, options may lose value rapidly. This is why option prices often rise before earnings announcements and collapse afterward during forecrush. Gamma measures how quickly delta changes. You can think of gamma like acceleration in a car. Delta measures speed. Gamma measures how quickly that speed changes. Gamma becomes especially important near expiry dates. These four Greeks work together constantly. Stock movement, time passing, volatility changes, and delta acceleration all combine to affect option prices every single day. One reason beginners struggle with options is because they focus only on stock direction. But options are affected by many forces simultaneously. The stock can rise, but time decay may still hurt the option, or implied volatility may collapse. Professional traders understand the Greeks because they help explain why option prices behave strangely. The good news is, you do not need advanced mathematics to begin understanding the Greeks. At the beginner level, you only need to understand the core ideas. Delta measures stock movement. Theta measures time decay. Vega measures volatility. Gamma measures how delta changes. If you remember only one thing from this episode, remember this: option prices are not random. The Greeks help explain why options rise, fall, inflate, or collapse. And understanding these forces is one of the first major steps toward understanding options professionally. The next step for beginners trading stock options is to explore beginner option strategies and how traders actually combine options in the real world. If you would like to know more about beginner option strategies, please let me know in the comments section. Like, subscribe, and continue learning one step at a time.